General Motors shares, you can see, down over 3% this morning after news the company is set to take a multi-billion-dollar charge tied to scrapping many of its plans around the production of EVs. Phil LeBeau has a lot more on this story, of course. Phil.
David, this charge, which was announced in a 8K the company dropped after the bell yesterday, it is a pre-tax impairment charge on the company's EV assets and investments. And we know that there's been one in the third quarter. There will be more in 2026. Here's what it comes out to. $6 billion will be written off by General Motors. That will impact the net income, but EBITDA is not going to be impacted by this. Q3, they wrote off $1.6 billion. And again, the company has announced it expects more of these. They said it again yesterday. More of these charges are expected in 2026. For General Motors, its fourth quarter EV sales were down 43%. Had a big surge at the end of the EV incentives, which ended in September. Q3 numbers were big. Now we're seeing the slowdown in EV demand in this country, down 43% in the fourth quarter for General Motors. Overall, EVs made up just about 7.8% of total sales in the United States last year. Hybrids coming in at just over 14%. And there you see internal combustion engine vehicles now down under 80% of the vehicles sold last year in this country at 77.8%. As you take a look at shares of General Motors, keep in mind that this company will be reporting its Q4 financials on January 27th. No doubt, guys, they'll talk more extensively about the adjustments they've already announced when it comes to EV production and what they expect for 2026 in terms of both EV production as well as the market overall. Remember, they were down. EV sales, I should say, were up just 7% for the whole country in 2025. We'll see what happens as we see the end of those EV incentives. We'll see where it comes in for 2026.